Hey, we're live. Hey, everyone. It's what is it? It's the 8th of August, 2024. Welcome to Deribit Live. I'm Shane, along with my co-host Richard, and we got had some interesting action. We had a impromptu session on was it Monday? I think Monday or Tuesday we had when the market had a big crash.
Yeah,
Monday. It was good to sort of talk Tuesday. About that, and I can't remember. It's all a blur now. But so we're gonna take off where that left, and obviously if you're here, you've been paying attention to what happened. I don't need to tell you, but we're gonna expand on that and maybe look what's going forward and discuss some of the pertinent issues that might be a case for the bulls or the bears, and maybe some short-term trading strategies, along with all the other good stuff. Now, if you're new, at the end, we just got about 30 minutes we spend with each other. And then the last 10, 15 minutes or so, we just answer questions or ask questions, whatever. And you can put those questions into the Q&A section. So, hey, everyone. I can see we got Nick, Vladimir, Johannes, Paul. Hey, saludos. Good to see everyone. A few more people still rolling in. So let me just bring up slides so we can deal with the topic of today, trading crypto options with the pros. That's us. What are we talking about? Well, we had a bit of a global meltdown, didn't we? Although it doesn't seem so bad now, it really just seemed to be a flash in the pan so far. Whether it will continue or not remains to be seen, but it was pretty freaking dramatic. Mm-hmm. And if we want to talk about, never mind the yen unwind, never mind the Nikkei, Taiwan, S&P, like everything was hammered. Some record one-day levels. Bitcoin, we're down 30% from I can't remember what point in July, but 30 freaking percent. I mean, that's a move. That's a move. So I know a lot of people are feeling the pain. We were on our long accounts, and in fact, we're going to share that. Synth miner got beat down a little bit, but we fully expect to be back up before long. As long as Bitcoin behaves, it doesn't drop another 30% or another 30%. If that's the case, we'll have bigger problems than this little account we earned for a demo. And just as a reminder, the synthetic miner account is designed to accumulate more Bitcoin. Even if it goes down, we want to get more Bitcoin, so when it starts to go up, we're just gathering. So when it's at the dream level of 250,000 or whatever you think it might be, a million, we'll be making lots of money, right? So it's a long strategy. So it's going to take a bit of a beating if we get extreme moves down. All right. So the topic is the bull run still on? Well, we think so. And let's talk about that in a little bit. First, we'll just review here. Let me just move our heads out of the way here. Especially Richard's. Look at that. It's way over there. What's going on?
Right in the way. Yeah.
Yeah. That looks a little better. So, hey, we've been doing this for 161 days with this account. Start off with 0.0825, so we're down. We're down a bit. We've got 0.0762. We'll look at the charts. I mean, 30%, it's a lot. But, hey, so we're down a little bit, 16%. Not a big deal. And, this type of a strategy, too, you have to, even like iron condors, for example, great. Unless you get a pretty extreme move one way or the other, you're going to take a hit, and then it takes you adjust, and then you roll it back in. So it's always that's the way it goes. So let's see, cash down a bit. Our annualized return for the first time ever, I think, went negative 32%, and hodlers minus 20%. Let's just
actually, Shane, I think there's a mistake on that slide. That the today's USD cash is not 6,163.
Oh no, it'll have to be lower. It'll be below five grand.
Yeah, 4,371. Yeah.
Okay, that wasn't updated. Yep, that makes sense. So here's the. I need to move our heads again. There we go. Here's the chart. So obviously this gigantic. So if we look back to the prior big drop down, that was the last big one in July. We recovered it very quickly. Here's this one, just happened days ago, and we'll see if we can recover it just as quickly. Hopefully we can. As long as the market goes sideways or grinds up, we're going to be fine. Even if it goes down slowly, we should be okay. But
what this chart reminds me of?
What?
It reminds me of the film. It's one of my favorite films, The Chronicles of Riddick, where he goes, "You should have taken the money, Holmes."
That was that Vin Diesel, wasn't it?
Yeah, it was brilliant film.
Yeah. All right. Let's take a look at the cash US dollar return. We're just slightly below the hodlers there, but
so what's interesting and what we don't record on this sheet is that the actual cash on the account is. I wonder if that's what the previous slide was misreporting or was reporting. It goes to the first slide.
This where we had this USD cash, yeah.
Yeah, because so the cash balance is still 1073, and it's actually only down because we bought some downside protection.
Yeah, we spent some money,
and we'll explain what we're doing there. We're sort of paying a bit of insurance forward and then trying to claw it back.
Mm-hmm. Mm-hmm. Yeah. I mean, there's so many different strategies and so many different ways of doing things. And actually, we're going to talk a little bit about some strategies. We'll bring up the charts here, which I'll do right now. I don't think we're going to do any live trading today. I think we've made all the adjustments we need. Yeah,
but we can show the. Shall I show the book?
Yeah, sure. Why not just do that? Right. Then once you're done, then I'll jump into the chart and we can talk about some strategies.
Okay. So what we've done is, you may remember we had a 9th of August short put spread that actually 3 of them, or 0.3 of them, and from memory serves, we were short, I don't know, 65 to 68k puts, and then long 60ish, right? Or maybe 61. So we got deep in the money on that spread, and in fact, we took the view that this spread is not doing us any good. It's just locked up cash that we're going to just throw away if we're not careful. So what we did was we actually took those put spreads, and we actually went and wrote naked December puts down at 60k and below.
Mm-hmm.
Can
you just zoom in just a little bit, Richard?
Sorry, sure. There we go. Bam. So this is December, mm-hmm. And so we've and you see that the premiums we're getting for these contracts are actually equal or more to the amount of cash that was locked up in the put spread. So we've sort of recovered the cash and we've put it somewhere where we can earn money from it. Now, just writing 0.3 of naked put spreads in December on this account, which is tiny, is a very extreme move, and that would have used like 40 to 60% margin to do that. So what we then did was go out to October and buy some 10% down put spreads to kind of protect the worst possible scenarios.
Long puts, yeah.
Sorry, we bought some naked puts. Mm. And it actually occurs to me we could actually turn those into put spreads and actually claw some cash back. But and so that cost us a chunk of cash. It probably cost us one of those December put spreads worth of cash to do. So, but it has meant that the margin use is now only 14%. So our worst possible drawdown now can only be 14%. So we're kind of feeling safe. And now what we've got to do, of course, is claw back the money that we're spending on this insurance as fast as we possibly can. So we're a little bit wary of another downside wick, but we're also becoming more wary of the market actually starting to recover and not charge up, but start to gain some legs. So we're writing very, very short dated 1x2 call spreads. And in fact, you can see here for tomorrow's expiry, we've left cover in for a bunch that were already there, but the salient spread is here. So we sold the 58k and bought the 60 and 60 and a half and 61 in twice as much. So just in case the market does go ballistic up, over the next few days, then at least we'll only lose a little bit. And what we're kind of losing on this spread, we're gaining on the December puts. So it's kind of hedged. And then we've got a little bit on the 10th, and we're just rolling as this stuff rolls off. We're just rolling it to the next day, and roll it to the next day, roll it to the next day, and we're just pulling in. Well, in actual fact, if you look at the theta, theoretically, pulling in $100 a day in premium on this tiny account. Slightly negative delta, but that would get very quickly positive delta if we had a massive move up. And
I think after tomorrow's expiry, we'll flip to a slightly positive delta. I think.
Yeah, I think we want to be positive delta after. I just got this feeling that the market's going to want the expiry to go out at a certain level, and it's going to want this week to sort itself out, and then next week it's going to rethink about what everyone's doing.
Mm-hmm.
Yeah, I don't actually want to go on to that because it's the picture's not clear to me yet. What's going to happen?
All right. Why don't I share my? Do you want to take a look at volatility surfaces or anything like that before I move on? Or are you okay?
We can do. Let's have a quick look.
We saw we had some negative skew, but it's eased off.
It's eased
obviously.
off. Yeah. The market's becoming a lot less uncomfortable. And in fact, the negative skew is now at normal levels. So you'd expect that slight negative skew normally if the market's rising. And in terms of, let's have a quick look at the historical vol surface over time. I can put this into constant maturity at the money vols. Oh, plummeting.
Yeah.
Interesting.
That's very interesting.
That means the spot isn't happy. Interesting. Yeah, spot's selling off a little bit. That's okay. That's interesting. Yeah, the picture isn't clear to me right now.
Yeah. Let me. If you stop sharing, I'll bring up my chart and I can talk a little bit on that because to me, there's some interesting things happening here. Do you see my entire screen or do you see my desktop? I think you see.
No, I see your screen. Yeah.
Okay. Look, if we, let me just bring up my ruler. We're talking here, which is July 29th, tip to tail. That's freaking 30%. I mean, that's extreme even for Bitcoin. Considering that we had a couple of big moves down, and this is that previous big move we saw on our synth miner chart. We took the drawdown and we quickly recovered it. But I talked last time about this support level being breached, and I said, look, from a technical side, the way I do things, not that I'm the be all know all, is I never consider a technical support or resistance area invalid when it gets a wick through. Some people do. It's got to close and stay down there and say, no, we're down here. Okay, fine. It's done. But when you get a wick through like this, right back up, and look where it's stuck. It's stuck right at the top of this box that I drew last week. So where's it going to go? Well, if the past is any indication, we had all this drama, and oh my God, it's the end of the world, and boom, 70K. Are you kidding me? If we go back, boom, end of the world, 70K. Are you kidding me? Why would we just repeat that pattern? Now, I'm not saying we're going to, but I wouldn't be shocked if at the end of August or middle September, we're pressing all-time highs. It wouldn't surprise me in the least. And I know we're back to positive ETF inflows. Today, Morgan Stanley's starting to, pimp out to their high net worth clients. So there's still, fundamentally, it seems like this big event, it kind of followed the rest of the markets around the world. What's going on? Oil fell, gold fell, everything fell at that time. A lot of recovery. And I suppose we can talk about this a little bit later. Is the yen unwound or unwound enough that the rest of the unwinding isn't going to affect the market? Something we could talk about. If we look on a daily chart of the S&P, I mean, we could, here's let me just switch to a daily chart. This is the end of the world. Well, in fact, if I was a technician, I'm like, well, no, this is just kind of a great buying opportunity if it's an uptrend, right? I mean, I'm not saying that it is. I'm just saying, this is not the be all end all. If we went down to here and then to here, okay, and we saw the VIX. I mean, the VIX volatility index, it was stuck down here for, I don't know, a million years, it felt like. And all of a sudden we went up to 65. Crazy stuff.
I think that's the second biggest VIX increase ever.
Yeah, big stuff. So what am I thinking here? Well, obviously we're going to move. We're not just going to go sideways because Bitcoin does not do that, or certainly doesn't do it for more than usually a few days or a week. If we stick here, we're either going to come back down into this area, in maybe the low 50s, mid 50s. It wouldn't surprise me at all. Or we're going up here and we're going to 62, 63. We're not going to hang out in the middle here, probably, because if you remember my mantra, trading is always level to level, level to level. That's it. It doesn't stick around in the middle for too long. It seeks out those levels. Now, I think that the pain trade you were saying before the call was 59.5. Is that what you were saying?
The pain for this expiry, for Friday expiry, is 59.5 is the max pain. Yeah.
So I wouldn't be surprised if it's sorted out. But how could you play this? Well, if you really believe this thing's going to keep going up, you could buy a call spread, or you go long calls. You could do a ratio spread or a back spread. Buy some calls going up here and sell some up above this range. You could sell them up above this range in a longer time frame. You could buy a risk reversal. You could sell some puts down here because the puts still have some decent weight to them in order to finance your calls. There's a few things you could do if you felt that the market was going to go up here and you don't want to spend a lot of money burning your theta away on that gamble, because we are at this pivotal level right at the top of this resistance, and we could bounce around here for a little while. It could happen, but it's stuck here at 57. Surprisingly, I was a little bit surprised when I woke up this morning. Went from 54 to 57. I thought, okay, that's interesting to me.
It's interesting that 25 delta puts are currently 6% more expensive than 25 delta calls.
Yeah.
So you could theoretically, if you can execute it right, make a small bit of money by going long with a synthetic, a risk reversal.
Yeah.
You could get in there at zero cost or a credit, right?
Yeah.
But not that I'm suggesting you do.
No, and we're big fans of risk reversals, using them on both sides of the market. But if you feel that, hey, we're going to have another plunge down before we go up, maybe that plunge down is just to test that low 50s, high 40s area again. Maybe, but what's the catalyst? I read an article and I shared it on our live stream this morning, on our Rogue Trader live stream. And I said, I read an article last night where it said Mt. Gox people, after waiting 10 years, surprisingly, they're hodling. There's a lot of people still bullish.
That doesn't surprise me at all, but I think because there are so many ways these days you can deposit your bitcoins and borrow money. So if you've been made into an overnight millionaire by that, and you shouldn't sell your asset, you should borrow cash, right?
Mm-hmm. That's another interesting thing, because you can borrow cash against Bitcoin now. That sort of removes incentive to sell it. And also, you got to think, on that 30% dump, all of a sudden, you get some Bitcoins from Mt. Gox. Are you going to sell it right after a 30% drop? Like that's like Justin Trudeau stupid level of things. like it's, like the way they got rid of the gold at lows at prices. Like, it's just like, who would do that, right? You wait, if you wanted to sell it, you would wait at least for a little bit of recovery.
Well,
even now we've moved up $10,000.
Gordon Brown did it in the UK government, and the German government just did it with Bitcoin. So pretty much any government will do it.
Any government will do it. Fair enough. All right. I just like to pick on Trudeau sometimes. All right. So I guess the point of this call we're talking about is the Bitcoin bull run still on, and I say yes, it's a dramatic move. If we look on the 1 hour chart or even on the daily chart, it meant 30% is no joke. And it caused a lot of pain. There was billions in liquidations, but we've seen this before. Maybe not always to the same extreme, but we were down 18% in one day. When's the last time we saw that? The last time we saw that, in fact, let me bring up my chart one last time, and we'll get to some questions here.
I keep saying, don't I, that statistically it happens once a year.
Yeah. So when was the last time we had some ridiculous? So this is that one day, right? It was this kind of black day. It was, I think it was about 18%. Let's just say 15 to 18%. But when's the last time that happened? Well, let's go to the 4 hour chart. Oh, okay. We can look over here. We can be like, all right, this is a pretty big move that happened back here. Well, it wasn't. Well, that wasn't in one day. Sorry. The one day would have been there. The last time we had a real gigantic move was when we went into this stupid range. It went up 26% within just a couple of days, right? That was a massive move. We went from mid 40s to mid 60s, and we've been holding that range ever since this winter, like February, March, right? So I don't know. Does that mean something from a technical side? A huge wick up, hold range, huge wick down. Are we going to hold the range again, or are we going to bust out of that range?
I think a lot's going to depend on macroeconomics, isn't it?
Yeah, and if someone wanted to argue with me and say, no, I think this is just, kind of lower lows, I wouldn't argue with you. Maybe we will. Maybe we will be at 45 or 35, in a couple of months. But we've got ETF inflows. We've got
very telling, right? We noticed this on our daily call that the BlackRock ETF inflows for the 2 days of the after the crash were zero, not negative.
Yeah.
And so the BlackRock has had inflows or zero now since I can remember. And I think, is it Morgan Stanley have told that their salespeople that they can now offer to allocate as of today or yesterday? Today. As of today, they can offer to allocate, or the high net worths can offer to allocate into the BlackRock ETF.
Mm-hmm.
So you have to assume that there's going to be some. Now I assume that BlackRock have been busy buying the dip in order to offload that inventory onto the people who want to buy into their ETFs. I mean, you'd be stupid not to, right? If you had a balance sheet for it. So it may not be that they start sucking bitcoins off the market straight away.
Mm.
I think it does provide a sort of a backdrop of upward pressure against all the other downward pressure stuff that we're going to get.
Mm-hmm.
I mean, we're still not out of the woods regarding Silk Road and all that stuff. And it's debatable as to whether we're out of the woods in terms of the carry trade.
Mm-hmm.
I noticed that the Bank of Japan. I mean, this makes me laugh and seethe actually. So the global hedge fund world and the banking world basically threw their toys out the pram at the Bank of Japan for raising interest rates 0.15% in a so-called surprise move, causing them to have to unwind gazillions of dollars in leverage degen trades. And then they have the audacity to go and yell at the Bank of Japan in public, "What the hell are you doing?" Well, what we're doing is managing an economy while you guys are just being degenerates.
Yeah.
But actually, the shamefully, the Bank of Japan have come out and sort of semi-kowtowed to the market and said, "Well, not we're sorry, but we've heard you, and we'll make efforts not to make surprise moves again." Well. No, the central bankers in the 80s would have just said, "Screw you guys, do some risk management."
People got so used to the juice. They just had that free juice, that free money for so long. It's like you get to like a welfare society, right? It's really hard to get them off that once it becomes generational. Same thing,
and then Vladimir actually mentioned the war. I notice how I've already forgotten about the beginning of World War III in the Middle East, the so-called, I'm calling it the choreographed war between Israel and Iran. There's no way that Iran's going to do a ground invasion of Israel, and the reason for that is that Iran needs all of its troops to keep its own people under control. It can't afford to go gallivanting off into other countries, but they will chuck some missiles in if they're given the chance, and some drones at prearranged targets. They'll consult with the US to agree which targets they can hit and which ones the Israelis are going to let them hit, and then the Israelis will retaliate with some kind of and there'll be this managed tit for tat. There's no way that anyone's going to allow them to actually go to war.
And I think this is what we've seen in the past. Every time there's been threats, it's really end up being a nothing burger. I mean, one day it could escalate to something else, and I sure hope it doesn't. But this just follows the pattern.
You need somebody with an interest in it escalating, and nobody has an interest in the Middle East escalating. Everyone needs the oil. I mean, you can't extract oil from a nuclear war zone, and if Israel did start to get overrun, they would launch nukes, and that's the end of it.
Yeah.
And they would do it.
All right, we've got some questions here, and maybe we partially answered this one question. Johannes, what's your macro view on Bitcoin? Is Bitcoin digital gold with all the ETF inflows more like a stock and behaving when war economy crash happens? A good question. I think so. I mean, I think that it's going to have these temporary dips when other things break down, but long term, I still think it's going to appreciate. Personally, that's my personal opinion, and that's why I think we're not gearing this we trade all kinds of accounts and all kinds of strategies, but this synthetic miner that we have is a long strategy. We're not going to change our outlook, and in fact, this is just a good opportunity to maybe buy more.
Shane, is this the first question from Johannes that we're answering?
On the Q&A side, yes.
What's your macro view on BTC? Yeah, I have a view on this because there's this whole narrative about Bitcoin being digital gold, which I don't believe for a moment, actually. But for the moment, it's a useful fiction. Remember that Bitcoin was struggling at 30K before the Bitcoin ETFs were legalized, and then shot to 60 odd K. So the last 100% of increase in the price of Bitcoin is absolutely and only due to the fact that the US government is giving protection to Bitcoin by allowing you to store it in a US regulated ETF. Until that moment, it was blood on the floor, right? So is this digital gold? No, because gold doesn't need to be people to tell you that you can store it in an ETF for it to become valuable. People just value gold instinctively. So Bitcoin isn't digital gold. And my personal view is in the next decade, which is probably the rest of my trading career, we'll probably see $1 million Bitcoin, and we'll probably also see $0 Bitcoin. Is my cynical view of it. But for now, it's seen as a hard asset. So by all means, it's going to carry on going up. That's my take.
Question from Andre. My returns are a bit similar to your synthetic miner strategy. Goes well for a while, then gets a blow. How to get away from these big downturns, which consumes all the profit made during months of trading?
Take less risk.
Yeah, less risk. You can hedge more on the downside if you want and have a more balanced approach. The synthetic miner is not designed to make money if it goes down. We know it's going to lose money if it goes down, and we just accept that with this particular strategy. And I think that maybe a good idea to do, and what I kind of do with other trading, is I have different accounts that do different things. They're not all going to perform well in a sideways market or an up market or a down market, and you've kind of hedged your risk off that way too. If you've only got one account, I think that personally, if I only had one account to trade, I would be more inclined to remain flat most of the time, or just sell some light iron condors or something. So I'm just earning a bit of theta, but wait for opportunities. If something wants to move 10, 12%. Okay, I'm going to jump all over it and then manage that because we always normally see a reversion to the mean, or you can counter trade it or whatever. If you want to trend trade Bitcoin, it's a little tough because it's got quick, fast, volatile moves, and it's difficult to do. So I'd rather counter trend it.
My flagship strategy that I do for hedge funds is essentially a short vol strategy, but we are constantly delta hedging, and we're just picking up tiny little discrepancies between the implied vol and the realized vol, and that's been making money all year. Actually, we haven't had a down month yet. But it doesn't make anywhere near the sort of mega returns that we see on Synthminer on the up days. It chips away and sort of pulls in like 4 or 5% a month, which is good. I mean, Bitcoin's good for that. But the crucial thing about that strategy is it doesn't give surprise, terrifying drops in value, because the hedge funds wouldn't appreciate it, because their clients wouldn't appreciate it.
Sure. Another question from Juan. Given the market uncertainty, would rolling into a straddle strangle make sense here? I'm wary of a further drop regarding Iran or a sharp rebound.
We had exactly the same conversation yesterday, because we were talking about rolling into strangles, and I think it was me who was too terrified to do it. In hindsight, it would have been fine, but yeah, the market's bounced. Do you remember in the old days, before there was quantitative easing automatic on tap whenever markets went down, there was this term called the dead cat bounce. So whenever there was a dump in the market, there'd be a bounce, and then there'd be like a little wait, and then it would dump again, maybe even further, because like dead cats don't bounce very high, right? And I can't help getting that picture out of my mind that we've literally just had a dead cat bounce on Nikkei and S&P. Could it really be that we had a mass 17% drop on the Nikkei and a 10% drop on the whatever it was, on the 5% drop on the S&P, and nobody got on margin call, and no one's now scrambling to figure out how to unwind their damn positions and pay everyone off and get bankrupt, and therefore they've got to sell all that stock and get rid of it. Surely that's going on, right? Surely.
Yeah. And this is what Richard's talking about is coming down here, and then kind of coming up here, it stalls, and then continues on down. That's the data cap bounce. And actually, there's an argument to be made for that, because it went up to the top of this kind of area. If it holds here, it could really come down. I think if it breaks above, then this remains support in my opinion. But
yeah, it's pushing up now. By the way, it's 57.7 now.
It's been strong.
It's pushing up really hard. Wow,
Yeah.
It's 58.
Yeah.
Wow. Okay.
So we're going to have some short calls to manage, but we're okay with that. Let's move on here. Question from Paul. Selling spreads on either side feels uncomfortable. If we would realistically get a big wick up or down, sure. Then again, paying the carry on a straddle isn't appealing either. You mean if you're a long straddle, I guess?
Where is this?
Question from Paul.
Paying carry on the yeah. Well, I think you're. I presume you mean a long straddle.
I think you must mean that. Yeah.
Yeah. I nothing feels good, right? At the moment.
But does anything ever feel good in Bitcoin? All we know is it's going to move from this position dramatically. Paul just clarified. Yes, long straddle. Yeah. It sucks. It sucks when you burn that money and nothing happens. You think, oh man, I just burned.
Well, one thing that one of the deribit insights guys are suggesting is that since max pain, since the sort of next resistance levels at 61k, they're suggesting what you could do is buy the 60k calls and sell the 62s to pay for it in 1 by 2. You'd get a net credit, or you would have done this morning.
Yeah,
and that does give you an unlimited upside risk, but
and you could improve upon that too if you so for example, if the idea is that, hey, you want to buy let's say a 60, you're buying the 60. I'll make that green so we know we're buying. You're buying this call, and then you're selling. Let's say the 62s. I'll make that red. The premium you receive from selling this will pay for this. So if it does go up, but you're going to limit your upside to here, but you'll actually lose if it goes above. Now you could just do this as a 1 by 2, as Richard said, or you could do it as a back spread or a ratio where you buy this. Let's say you buy this on the 16th and you sell this, or maybe you sell it a little bit higher on the 23rd or the end of the month and get more premium for it. You could do that if you're comfortable having a little bit of short calls, or you could just sell one further dated. If you sell one, at the end of the month, maybe it would fully cover the 16th long, if that makes sense. Sorry. Does that make sense?
Yeah.
All right. What do we else got here? Questions here. Dominic, I just discovered, okay, starting off with a good, it's possible to go long short on perps and perfectly hedge them within the money long options, where you try to get the break even as close to possible to be filled to the filled order price. Then you benefit from the difference between options and perps. Do you have experience with this strategy? I need to reread it. So you're going long or short in the perp, and you're hedging them with in the money long options.
Long
because they're one delta, I guess.
Perfectly hedge them with in the money long options. Well, they won't be perfectly hedged because they're effectively an in the money long option is a long put with a long put. So you are paying for the put, but as the market goes up, you.
Johannes made a comment. Check out the call put parity.
Because that should all even out because the current forward price is embedded in the option price, so there shouldn't be an arbitrage there. We
Maybe need
got one person
more
wanting to
info on
speak.
that.
Sorry, guys, we can't let you speak because we don't have enough. We haven't paid a license fee, so we can't actually let you into the voice channel.
Let's see. Vladimir, strategy that Dominic offered will struggle because of funding.
Yeah, you'll pay funding if the market starts to get strong, like it is now. Well, actually, the funding cost isn't that high now, but if the market gets strong, you end up paying a lot of funding.
Mm-hmm. Andre says, "quote unquote protection." I don't know what he's talking about. Oh, probably a comment about putting some protection on some positions.
Yeah.
Yes, protection. No glove, no love, Andre. No glove, no love.
Yeah, the long short of it is that if there's an arbitrage in going long short futures versus or options and so on, and you can do all that with inside the spread and still make money, then sure, do it, because it doesn't tie up very much capital, and it'll make you a return.
Yeah, and Johannes made another comment here that you'll get the same premium that you would get from dated futures. Unless, Dominic, you've stumbled onto something that we're really not seeing before, then feel free to email us with your strategy and maybe blow our minds. But absolutely, it's always a lot of different ways to look at things.
What I do often see is that the implied funding rate does blow up and down quite a lot in time. So when markets are selling off, you get the long-term funding rate going down to about 5%, which is about the cost of dollars. And then when the markets start going up, the long-term funding rate goes up to like 12, 14, 18%. So there are some plays to be done there.
Vladimir has a question here. I'll add to my message. From my perspective, it's a good idea to take money even for 0.25% per year, probably even higher.
Well, I mean, if you can do it risk-free, why not?
He also said, don't you also think that Japan traders are simply weak hands to sell off everything when interest rates are only 0.25%? Sorry, I did that backwards. Sorry, Vladimir. I should have the first question first.
No, that was all to do with unwinding because people were massively borrowing yen to buy US stocks, and so they had to unwind all that. Although, actually, why did I think the sell-off in the Nikkei was more to do with contagion from the US, probably.
And just to follow up on Richard's comment, so Athanasios, I assume someone in Greece, wanted to ask a question. We can't bring you on live, so if you have a question, please just plug it into the Q&A section of the chat. What else did Vladimir? Andre said regarding protection, no, I mean the U.S. government offering protection for Bitcoins in the ETF.
Well, but by the Federal Reserve jumping to the tune of large banks, because it is owned by large banks, then effectively you do have protection, because they will just find a way to magic money into the system to protect asset prices, and now the ETFs are part of asset prices. So Bitcoin is no longer a contrarian asset. It's a bet on the US financial system carrying on its charade of wealth.
Yeah. And to clarify, you're right, it is owned by the banks. Let's not forget that the Fed is the private corporation. Has nothing to says nothing to do with the U.S. government, but it's private.
Well, it tells the U.S. government what to do.
Let's not go down that rabbit hole conspiracy. We're over time. Hey, any last questions? Let us know. We've gotten a little over time. We'll wait a couple of minutes. So let's see what happens. Where's my chart? Here's
58,200.
Okay. All right. So it's poked up a little bit. So I actually bought some. I think I bought some 59,000 calls just before the call, and I sold. They expire on the 16th, so next Friday expiry. They're 59 or 60, I can't remember. And I did sell, I think, some 64s, 2 of them on the 23rd. So I did a ratio spread there. So let's see if we can get up to 62, 63 in a week. I'll be laughing all the way to the bank on some of those discretionary accounts.
Nice.
What else we got here, guys? Oh, one more thing here. Hey, Johannes, you're welcome. Good to see everyone, as usual. let's see what happens this week. I wouldn't be surprised if for next week's call we're in the mid 60s again, and people are screaming that it's going up too fast and getting hurt by short calls. It's the pattern that Bitcoin does. I hope it does, because I know most people are long oriented. So take care, everyone, and we will see you next Thursday.